Hi everyone, I'm Ken from CryptoTradingKS. If you're new, welcome, and welcome back KS family. Let's run the numbers. Bitcoin currently down 3.34% to 38,549. Ethereum down 4.53% to 2809. From my 30 plus years in financial markets, I explained the smart money mindset to assist you to be more of a financial blessing to yourself and those you love, gaining real wealth in the process. If you would like daily updates on price movements in the crypto market, 7 days a week, 365 days a year, please subscribe to YouTube. Thank you for being part of our globally extended family. I appreciate you being here. As we spoke about yesterday, Ape was very extended. It's come down hard, but so too has the entire crypto market. What we can see, Bitcoin has been retracing and it's taking everything with it. This is one thing you need to keep in mind as you go through the crypto market. Bitcoin is the king, and Bitcoin will actually alter the gravity of your beloved alts. But it doesn't mean that some alts can't escape that gravity. You can see here in entertainment, GMT is doing quite well. JST is also doing well. There are always opportunities within the crypto market. ENS was doing really well yesterday, and you can see that got very hard hit. When we look at blockchain infrastructure, we can see the majority of those cryptos are down. And we can see a few exchange tokens are up at the moment, but the majority are down. That's why having a lens of kindness is really important. Also, integrity and decency is important. No bad deed goes unnoticed eventually. Having gratitude and happiness actually creates a meaningful life and existence. And we understand, as crypto technical analysts, our focus is money, definitely. But without all of these components of a positive life trend, money doesn't mean much. And that's something a lot of very rich people find out. There's a very big difference between riches and wealth. Without self-mastery, wealth disappears. When people are new to the crypto market, they enter the panic zone and the blame zone, and these are the rules that lose money. These behaviors lose money. Everything is tied to certainty. People must know. They absolutely must know. They want entitlement. They just want a participation award. Hey, I turned up, I put my money into the market. Why aren't I making $1 million? Why haven't I retired from my job? And unfortunately, a lot of influencers shill that. We are not like that. It's all hard work. If you want the money, comparable to being a surgeon, being a lawyer, being an engineer, being an accountant, you really need to put in the work. Nothing is given in this world. Easy come is easy go. But what about the scammers, you say, Ken? They work so hard. They're really hard workers. And they are. Scammers do work incredibly hard, but they have negative excellence, not positive excellence. They exist by taking other people's money, and they prey on people in Zone 1 and Zone 2. You can hear them by their language. Hey, guess what? If you do this thing, it's guaranteed 100% return and 0% loss. That is a fantasy, especially inside financial markets. What I do every day, 7 days a week, is try to take people out of Zone 1 and Zone 2, the high stress loss zones, and help them to migrate into Zone 3 and Zone 4. In Zone 3, we obey the make money rules, and they are very important. But Zone 4 is the keep money rules. There's all sorts of different rules that apply to how you actually interact with money. And money is neither good nor bad. It's neutral. Good people do good things with money. Bad people do bad things with money. It's not money's fault. Money's just neutral. Sometimes it's really hard to figure out where people are at. All investors and traders enter into Zone 1 when they start. Every single person. Being in Zone 1 or Zone 2 is not a bad thing. It's something that all of us have done. But we want to end up in Zone 4 with inner and outer peace, courage, strength, contribution, positive excellence, keeping what we have worked so hard to get. You can identify blame, Zone 2, because people are really jealous. If you strike people who are highly competitive, that is zone 2 behavior. There is no need to compete with anyone. You're a completely independent, inventive person. And in Zone 3 and Zone 4, we don't seek to compete with others. We seek to cooperate. It's a very different mindset. The competition mindset is always one of loss. They win, you lose. On a day like today, you may feel very stressed and have entered Zone 1 or Zone 2. Please keep this one in mind. It's really important. Accepting what has passed is being kind to yourself. You must be kind to yourself first and foremost. And having forgiveness for the past is incredibly important. It allows you to learn and move forward very strongly. And that's what it's all about. You don't want to get stuck in life. Rule 225, Bitcoin cannot escape the stock market's gravity. Crypto is a really tiny market in comparison with the stock market and the bond market. We cover this every day, but it's really important to go over and reinforce again and again. The internet was a very fast adopted technology, but Web 3.0 cryptocurrencies are the upgrade of the internet, and they're just starting their adoption cycle. We've literally got decades to play out. You are so early. A lot of people are calling for a Great Depression and the markets to crash and all sorts of things. One thing that you might like to understand, GDP year-on-year growth throughout the major countries is still quite positive. Recessions occur when GDP growth goes negative. We're not seeing that. One thing that we are seeing, which is really interesting, in the US, the interest rates are 0.5%. Look at in China, 3.7%. In India, 4%. Poor old Russia, 17%. Brazil, 11.75%. Turkey, 14%. When we have very high inflation, there's a requirement to save purchasing power. That's why cryptos are really good. If we enter a mega inflationary environment, and the inflation is going out of control, there's no question about it. There was just far too much money printing. But if they actually transition globally to high inflation across the board, that means that cryptos will become increasingly attractive. And we can see those inflation rates right here. In the US, this is current data, 8.5%, China 1.5%, Euro area 7.4%, and you can see it's really up there. Poor old Turkey, 61.14% inflation. Ouch! It's probably no surprise then, Turkey's second wave of major crypto interest, Bitfinex, Coinbase and KuCoin ramp up. You can see it in the inflation figures. Inflation is crypto's best friend. Governments have a really fine line that they need to walk. If they push interest rates too high, people will default on their loans. And if they do so, the jobless rate will increase. We can see around the world the jobless rate hovering, say at around 5.5% or thereabouts. The concept is that governments can't be too aggressive. They can make a policy stance. They will be aggressive, and that's just a form of social engineering. That's what the Fed is actually doing at the moment. The Fed knows that the markets will react to their posturing. Governments always do this. Around the world, we're basically in mid-stage, going towards expansion in terms of the business cycle. We're not in contraction. Only China is in contraction at the moment. And when it comes to Q1 2020 earnings data, we can see that 77% of companies have beat their earnings per share targets. When you read the news, you're going to find that the news sources, even really reputable sources, will say it's caused by X, it's caused by Y. It's caused by inflation, it's caused by unemployment, and then when the markets do the exact opposite thing, they'll say the same reasons. Just be aware of this. We can see that the US market sold off heavily last night. In fact, the Nasdaq sold down so much it was the worst month since 2008. There's a couple of stories here that are quite useful. What they're saying is Amazon losses rattled investors, and Elon selling $8.5 billion worth of Tesla shares basically brought the market down. That's not the way it goes. Financial markets are very, very, very complex. It doesn't rely on two things. It relies on about 2 million things. And something else, which I think is really worth noting, we said in the news yesterday that China is softening its stance. It's actually supporting supply chains opening up, and this is really important. And also today, China plans reprieve for tech giants, including a delay of new rules. Basically, China has punished its own economy very, very harshly. This is a great piece of news for global investors. When looking through the markets, we've seen that fear didn't come down that much. It's actually spiking up again. And we would anticipate a reduction in fear at some stage. But what actually occurs when people get really, really fearful, they tend to have momentum. But these momentum spikes generally are typically short-lived, but they can get a little bit choppy. The VIX is an animal. This is the fear gauge of the main market. And what happens when fear spikes up? Prices come down. Think about it in the crypto market. When fear is going parabolic, prices are selling off. That's because people are getting really highly emotional about their investments and their trades. And of course, if they're under leveraged, they'll just get liquidated anyway. And that's not where you want to be. The crypto market is so volatile. If you're under leverage and you haven't lost your account, you're doing well. That's what I would say is the judge of how well you go on leverage trading. Have you lost your account yet? If the answer is no, you're doing pretty well. That's why I say, please, if you're leverage trading, stop doing it. It may appear like you're really fancy and very knowledgeable, but the market will get you eventually. The market gets everyone eventually. And when you have leverage trading, you can wipe everything out. Please don't do that. Of course, it's your call, but I would suggest you don't. When you actually have a look at the fear gauge, fear has spiked. The NASDAQ 100 has come down heavily, and we had a spike, so the prices came down as well. This is important to understand, this dynamic that exists between fear and indice price. Unfortunately, and I say this, it is really unfortunate that investors and traders get so emotional. They see red and they say, I need to sell. That's exactly the opposite thing of what they should be doing. And what about a crash, you say? Ken, if we get a crash, everything is going to plummet. Crashes are unavoidable. It's part of the system. They're baked in. We don't know when they're going to come. We can get some kind of idea, but it's not important because those crashes are actually the most profitable time. Instead of worrying about crashes, we can just prepare for them. And you can always do your own risk management. Many people say, should I buy, should I sell, should I liquidate my position? Only you can answer that question, because only you know the importance of the money that you put in. If you need it now or you need it to pay the rent, for example, it's really, really personal, and everybody has a different risk profile as well. So when people say you should do this and they're talking to 100,000 people, of course that advice is not going to suit all 100,000 people. We can see that bond prices are way overextended to the downside and bond yields way overextended to the upside. We would expect some kind of correction soon. And this is the thing with the stock market. The stock market is like watching grass grow. In the crypto market, things move really quickly. You can be much more predictive. But in the stock market, everything is slow. When we look at gold, gold has come down to a support area. It bounced and then it's retracing. Remember, price is always moving in a wave, going up and coming down, going up and coming down, going up and coming down. That is price. A lot of people, a lot of influencers get out there and throw those skull and crossbones and scary faces and swear on their thumbnails. But this is just normal price action. When you've been in markets for decades, you look at it and say, okay, oil is going parabolic, better sell. And what happens? Zone 1 and Zone 2 get very, very excited. Oh, it's certain that oil will go up. Look at it. It's going parabolic. It's a certainty. It's going to 300. I'm going to make money. I'm going to retire. And then what happens? The markets crash down and they say, oh, I'm wrong. I need to get into this particular thing. And then the markets go up and they say, yeah, I was right. I bought there. And then the markets come down. You get the idea. You cannot let emotion rule what you do in terms of buying or selling at any stage. If you do, you're already lost. And we can see the DXY, the US dollar currency index, absolutely going parabolic at the moment. Oh, what does that look like? Does that look like gold when it went parabolic? Yeah, it does. What about this? Does it look like oil when it went parabolic? Yes, it does. What does this mean? Retracement is coming. When you listen to influencers, when you read the news, please understand if they're trying to get you into an emotional state, one of hope, optimism, thrill, anxiety, denial, panic, and panic selling. If they are, they're a retail influencer or they're talking to retail people. We don't want to be over there. It's just like when you drive a car. If you drive angry or you drive highly emotionally, you're not going to drive really, really well. And that's like everything in life. If you're a highly emotional surgeon, you're probably going to make mistakes. If you're a highly emotional accountant, that's not so good for your customers. Professionals are not emotional. They've maintained and found a way to constrain emotion, and they just put it off to the side. And that's exactly what smart money does. They are not governed by their emotions. They're cool under fire. As smart money, you are professional. You're in Zone 3 and Zone 4. Positive excellence is the way that you look at life. You're unemotional. You have the knowledge because you've done the hard work, because you've been dedicated and patient. You apply the rules, you run the numbers, you understand how things relate to each other. You use the CTKS method to mark up your charts, and you understand fundamental concepts like the 10% per week, the 10-5-10, BORSOG, and being on the right side of the percentage. You understand these things. Retail doesn't understand any of those things. It's emotional, gambling, luck, all about competition. Competition is a really, really ugly thing. If you're engaged or feeling very competitive, you are not in Zone 3 and Zone 4. You're in Zone 1 and Zone 2. Don't forget that they're the punishment zones. It's also useful to think that there are actually three markets. There's a bull market, a bear market, and a hidden market underneath both, which is the BORSOG market. That's buy on red, sell on green. That's BORSOG. And BORSOG is an incredibly powerful concept, but you have to know what you're doing. When you have a red candle, you don't just automatically say, okay, I don't know what I'm doing, but I'm just going to buy this candle. You could have more red candles after that. You have to know what you're doing. And that's why we have so many rules, and so many rules are shared within the masterclass. This is a particularly important one. Rule 45, no alt can escape Bitcoin's gravity. Some really interesting news. Goldman Sachs processes first Bitcoin-backed loan. Go Goldman. So what does this actually mean? It means that people who can collateralize Bitcoin, put Bitcoin up as security, can actually make loans. That is pretty cool because this is a mainstream Wall Street banker. This is just another example of mainstream adoption. But not all mainstream adoption is well received. In fact, the Labor Department criticized Fidelity's plan to put Bitcoin on the 401k pension plan retirement menu. And how much can you put into Bitcoin? 20%, as we said a couple of days ago. Congratulations yesterday to those people who said they thought Bitcoin was coming down to be. That's where it is right now. Now, how did it get into B? We can see that when we overlay the Nasdaq 100, Bitcoin just followed the Nasdaq's gravity. And this is what often happens when there's sharp sell-offs in major indices. Everything comes back into alignment. And I know this correlation has been confusing a lot of people recently. A lot of people think that there's no correlation between the stock market and crypto. The crypto is an independent market and it's not subject to gravity. Hopefully this conclusively shows that that is not the case. Financial markets are incredibly complex. And please remember, we're coming into the weekend as well. Mainly light trading volume on the weekends, which means the price can jump around all over the place. So just keep that in mind. We look at liquidation data, long data and short data to get some kind of understanding as to the underpinning market dynamics. And when we look at the longs have been coming in and in and in. They're getting more and more and more confident. The shorts are also getting more and more confident. But we've seen a bit of a downplay in the shorts. If we were expecting a crash, we would get something that looked like this, something that would see a big spike in the shorts. Just because we get a big spike in the shorts doesn't mean things are going to crash. The shorts can get it wrong. The longs can get it wrong. It's just the nature of the market. It makes people right and wrong simultaneously all the time. In the past 24 hours, there's been 264.96 million in liquidations across 98,452 positions. What we've seen in the past 24 hours, about 82% of liquidations were long liquidations. About 83% of liquidations were long over the past 12 hours. Over the past 4 hours, nearly 92% were long liquidations. And over the past hour, around 67% of liquidations are long. This means the shorts are starting to come out of the market. And what do we see here? We can see both longs and shorts always getting liquidated. Just bear this in mind. And we're coming up to the weekend, so we would expect lighter trading volume as well. When we look at Bitcoin futures open interest, we can see that price is moving in alignment, directional correlation with futures open interest and Bitcoin's price. What we've seen recently is a pullback to this long-term support line here, but futures open interest is actually on the way up. We've had a bit of a retracement, but it's not a collapse. This is something really good to understand. The underpinning market dynamics would point to more open interest coming in. There's a lot of volatility in the market at the moment, absolutely. And you must do your three-way strategic planning on what you will do if price goes against you. But please bear in mind this as well. This is another piece of evidence in your detective clue book that futures open interest is still looking quite positive. And when we actually look at the crypto fear and greed index, we've got extreme fear in the market. That's absolutely the time the professionals come in and buy. They buy extreme fear. They sell extreme greed. You might remember years ago when we had a very big push up in Bitcoin's price just around this March area, March and April. Everybody had laser eyes on. Everybody said it's going to the moon. And it looked that way, absolutely. And then we had a crack appear inside the market. And then we had that very nasty 56% downturn. But then we had an excess of 100% upturn. When there is rampant fear in the market, what you will see is that's the absolute best time to dollar cost average in if you're an investor. Bitcoin is going places. It's really, really safe in terms of other cryptos. Other cryptos may make it or they may not make it. Bitcoin is going to definitely make it. And what do we actually see here? You see this particular piece of price action, Bitcoin coming down, violating this support. Many people said it's all over. Bitcoin is crashing. Bitcoin's going to $0. But then it rallied like crazy. You must be aware of this. When the market thinks it's right, it's often, in the majority of cases, wrong because people think emotionally about something they need to think professionally about. Does that mean that Bitcoin's price has bottom? It's not going to go down anymore. Of course we can't say that. But what we actually see, there's a lot of support through this zone, a lot of support through this zone and through this zone. Anything right all the way down to the $30,000 mark is absolutely well protected, and there will be big institutions coming in and buying. Now, why do I say that? Ken, you got it wrong. You know, the market's going to crash. It's because we need to step back. Fidelity's pension fund investing in Bitcoin is a major signal in the market. What basically means there's tens of trillions of dollars worth of funds in the retirement industry, and that can fund Bitcoin. And when Bitcoin comes up, what happens to your beloved alts? They get pulled up with Bitcoin's gravity. This is really good. A lot of people were wanting to buy more cheaply. They saw price come all the way up to nearly $70,000, and they said, oh, if only I could buy around this level when Bitcoin first took off. That's actually where we are right now. You can do it. And if you're holding for the long term, this is absolutely the best thing to do. But what happens is people get emotional. They're told, buy the bottom, sell the top. Absolutely. And when people are programmed by institutions to do that, they go all in and more at one particular time, and they say, oh, if I didn't get that absolute bottom, I've done the wrong thing. Some institution told me, but I don't know who it was. But that's the wisdom. It's not wisdom. The professionals don't buy bottoms. They don't sell tops. They don't even care about tops and bottoms. They participate and they ride the wave. Let's turn to a little bit of crypto news. It's possible that the XRP case may be closed by Christmas. Maybe. Judge Annalisa Torres put out her order here, but she's basically put filing dates, July 12th for motions, August 9th for oppositions, August 30th for replies, September 13th for motions for summary judgment, October 18th oppositions, and November 15th replies, if required, and a possible end of Christmas resolution to this ongoing basket case of the SEC trying to destroy the crypto industry. And it is actually what it's trying to do. It's trying to push institutional investors away from crypto. Why is that? Because crypto is a threat. Just like the internet was a massive threat to the telecommunications companies and the postal service, both owned by the government 30 years ago when the internet hit mainstream. This is just the same thing, same concept playing out in a different way. 30 years ago, and I was involved in the internet back then, running an ISP, I saw the government doing everything they possibly could to destroy the internet. And people now say, Ken, really? They tried to destroy the internet? But it's so useful. We'll be saying the same thing about cryptos 10 or 20 years from now. People will not look back at this stage and say, oh yeah, that happened. They'll say, how? I don't understand. This is just history repeating itself time and time and time again. When the automobiles came out, the horse and buggy manufacturers were really upset and they tried to destroy the automotive industry. They didn't have much success. The government didn't have success trying to destroy the first internet, Internet 1.0, Internet 2.0. This is Web 3.0 they're trying to have a go at. And Web 4.0, when that comes out, they'll try to have a go at that too. So just bear this all in mind. There was a very interesting report that was put out by the Ethereum Foundation, its annual report, the first one that it's done. The Ethereum Foundation supports the ETH blockchain without controlling it through a community of teams with a long-term mindset. It was a really interesting report, and I wanted to share a couple of key things with you. And I wanted to give a bit of advice to Ethereum Foundation too. You're not spending enough. You need to be spending much more. They spent a total of 48 million. On level 1, research and development, level 2, research and development, the development platform, the community development, and their internal operations and support. This is way too low. This is really, really low, and could be the reason that Ethereum has been struggling recently. If anybody's from the Ethereum Foundation, please spend more money. We need better technology, and the more you spend, the more you can actually help people. And that's what Ethereum Foundation is all about. They say, how can Ethereum solve this particular problem? You're going to have a lot of problems if you don't spend more money. Having a look at the Ethereum Foundation's treasury was really fascinating. They've got about 1.6 billion at the time of reporting. And what we can see is their Ethereum wallet at that time of reporting held about $1.294 billion. People have been criticizing the Ethereum Foundation for holding about 18.8% of its treasury in non-crypto assets and investments. I don't think this is fair. What actually happens in crypto, there is always a balancing act between the appreciation and depreciation of cryptos. And I think it's more than fair that Ethereum Foundation holds something in cash, because that allows them to withstand the volatility inherent and fund things. But if you look at this, non-crypto assets, just let's say that was cash, we've got a fraction of total expenditure. That's not so good. They need to be spending at least double or triple what they're spending. I would say 4 times would be good. Because what will actually happen as Ethereum gets better and it's not delayed, as teams are better funded, they can do more. We should be thinking about actually putting that money to use. I can hear some people say, Ken, spending 48 million, that's a lot. When you look at the market cap of Ethereum, 338 billion right now, after such a massive actual drawdown. You think about that, 48 million is just literally nothing. From my role as a former management consultant, I can only say, please Ethereum Foundation, spend more. The community needs you to spend more. And another interesting point, a lot of people have been attacking Ethereum Foundation on this $302 million of non-crypto assets. When it reported, the balance was 1.294 billion. Let's have a look at what that balance is right now. We just go to Etherscan with that particular address and we see it's been diluted down to 988 million. It's now under $1 billion, and that's because of the price action in Ethereum. Let's have a look at the top performing cryptos. We can see Ape out in front. Remember yesterday we saw the spike and it was just starting to retrace. And I was saying to people, be a little bit careful of Ape. We've seen this so many times. And you might remember I went back and showed you other examples of where particular prices spike up like this one and spike down. And that's what we're seeing with Ape at the moment. Ape is doing really well, but you must bear in mind that the rules of the crypto market are sharp angles reflect, and that's what we're seeing. Ape went bananas, but the bananas are being withheld now. I know a lot of people got a sense of certainty that Ape was going up and up and up, and they've had a lot of losses being incurred right now. There would be definitely people buying it around that top. That's why when you look at crypto technical analysis, it can save you a tremendous amount of money. The top performers over the past 7 days, Ape out in front up 25%, GMT up 20%, Kava nearly 13%, and MTL nearly 5%. Looking at the top cryptos, we've seen Bitcoin coming down, and we know there's a lot of support underneath here for Bitcoin. I think that what we'll actually find is that Bitcoin bottoms out at some stage. We could get a capitulation spike, something down like this. If that occurs, that's just completely healthy. The markets need to get flushed out, and that's what those capitulation spikes do. But what do we see here with Ethereum? Ethereum is following Bitcoin's gravity. What about Binance Coin? Following Bitcoin's gravity. And it's looking a lot healthier than what Bitcoin is, and Ethereum is looking pretty healthy too. What about XRP? XRP has actually broken down below this particular support, but it's encountering support here. There's a lot of negative news stories around about Brad Garlinghouse, the CEO of Ripple, saying that XRP has already lost the court case. I think that's a really, really bad publicity move. When you say things like this, people will say, oh, I better get out of XRP. I know what Brad is trying to say. He's trying to say, SEC, you've lost the plot on just giving jobs to all the people outside the US. But that's not how people are going to interpret it. Brad is also trying to say that if they do in fact lose, that the price is already baked in that they're going to lose. This is really, really, really bad. Brad, don't do that. You don't want to do that at all. You want to show the positives of the case, and there's so many positives that go in towards XRP's favor. That's a better position to take. When we look at ADA, Cardano, ADA is coming down, and we've seen that as Bitcoin's price comes down, we know what's going to happen to all these beloved alts. They're going to move with Bitcoin's gravity. There's nothing that we can do to stop that. That's why you must know Rule 45. It's a critical rule to know. A lot of people say, I don't know what's happening with this crypto. Just point the finger at Bitcoin. Don't blame it. Just say, it's over there. That guy did it. This guy did it. Naughty Bitcoin. Okay, looking at Solana. Solana continues to show a lot of strength here. And we marked this one up in the charts yesterday. Some particular resistance levels and some support levels. Let's have a look at Luna. Luna is looking absolutely technically beautiful, but I believe we're coming in for a bit of a retracement. I always say with things that are very highly extended, for example, if you were looking at Luna before, like this, oh, maybe not like that, like this, for example, I would say be prepared to get a wave back to 71 and even lower to around 55. And people would say, oh, Ken, it's not going to happen. It's just going to go up and up. What the heck? And then it comes down. And this is what you need to be prepared for all the time with crypto. Look, it even went lower, 53. This is the concept. Cryptos are inherently volatile. And look at what happens when they break out. They go absolutely bananas. Sorry, ape. Luna got your bananas at the moment. Oh, Banana's a new cast member. Okay, so what you want to do is when you're looking at things like this, just bear in mind that they can come down. We could even come down as low as $50. Could you deal with that? If you went all in and more, which I say, please never go all in and more, buy at levels of support going down. And even further, 10-5-10 is all about putting levels of support way outside what you think could possibly be hit, and then being very pleasantly surprised when they are hit. That is always putting the percentage on your side. You want the percentage to move with you, not against you. You don't want to buy up here and see the price falling down because you said, I'm so certain it's going up. Certainty is a very dangerous concept in the crypto market. No such thing as certainty in any financial market. In crypto, it definitely doesn't exist. It's like a unicorn. Let's have a look at AVAX. Oh, could be another character. AVAX, we can see AVAX just dropping below this particular support. Is that all over for AVAX? No, it's just following Bitcoin's gravity. If Bitcoin starts to put in a rally, what's going to happen to AVAX? It's going to do really well. The entire crypto market will do really well, and that's what we're waiting for. But we understand our three-way decision-making process. We're always prepared through the 10-5-10 for a crash. We're always prepared for downside volatility by buying at levels of support or layers of support below the current price. And we understand that we're not trying to pick the bottom. That's why I get you to buy in layers, because automatically you break the association. I must buy at the bottom. If I don't buy at the bottom, I should just leave the market. That's what professional institutions want you to think. And I don't know why they would want you to think that. That seems pretty stupid. But I think it's all about this competitive idiocy that goes on in this world. When people compete with other people, this is just a stupid thing to do. You don't need to compete with anyone. Just be your unique self. Yesterday, I asked the question, which out of these 8, Theta, T-Fuel, IOTEX, EGLD, Phantom, CHR, Loopring, and Atom, which look the strongest? It's LRC, Loopring. Why is that? Why is this looking the strongest? First thing, all charts have the same time period, so we're comparing apples to apples to apples. We're looking at exactly the same thing. What we've seen with Loopring, it's consistently shown strength above Bitcoin. It rallied up, came back, but it's not down like this. For example, Theta is down, T-Fuel is down, IOTEX is down. We can see EGLD is down. Phantom has broken down below that support, and CHR being very, very similar to IOTEX. And Atom is very spiky now. It really looks interesting. So the question for today, where do you think Bitcoin is going? Do you think that we'll stay in this B area, go down to E, come up to A, come up to C, or maybe even come up to D? Where do you think we'll end up tomorrow? And I'd like to thank all the new people who are putting in their letters. All you have to do is put in a letter, and it's a really, really good thing to do. Get to know the community. It's very loving and kind and very, very, very supportive. There's a lot of bad news circulating. So what is your plan? If we get a wicked sell-off, what is your plan? If it rallies, what is your plan? And how do you think from a three-way perspective? Are you going to let emotion override and just sell everything and sit on the sidelines? Or what will you do if price goes your way, goes against you, or goes flat? This is what all professionals do before entering any trade, and we know all investors become traders anytime they buy or sell. They do this analysis, and it's really, really important. That way, professionals are never caught off guard. You don't want your emotion to overlay your decisions. I'd love to hear your opinion. Where do you think the markets are going? And what do you think you will do? And you might like to talk about Rule 570, psychology sets profitability. How important do you think your psychology is to your profitability? Please let me know in the comments. I hope you found the content useful. Please consider sharing and liking this video and subscribing to the channel. We'd love to have you as part of our global KS family. Thank you very much to our moderators for keeping our community safe from scammers, and the CTKS ambassadors for mentoring masterclass students. And of course, a very big thank you to you for watching and for being part of our global KS family. If you would like daily updates on price movements in the crypto market, 7 days a week, 365 days a year, please subscribe to YouTube. I've left helpful links in the description of this video, such as the tax software I use, and also to the CryptoTradingKS Masterclass. Please click this link and seek out an ambassador. They can give you 80% off. Please remember, crypto is volatile. Always prepare yourself for the best and worst case scenarios. Reality will likely be between them. Stay safe out there, my friends. Take care and see you next time. Bye for now.